Yo guys, welcome to a new video about educational content. Today we are going to discuss stop losses. So this is an item that a lot of people do wrong, I think. It also depends on the market you're in. I personally we at DC Academy trade mostly crypto, so we will focus on the crypto market. So first of all, what is a stop loss? Stop loss is a limit order or a market order. It depends on the item you're trading. Stop loss is it could be a limit order where your position gets closed when it goes under a certain level. So as soon as the level hits, a order will be created to close your position in a loss. And the thing with stop losses is that people often use a fixed percentage of loss. So that's the percentage of, for example, 2%. That's often used. 1% is also often used. Those are percentages that are getting used. But that's the whole thing. That whole thing is wrong. So where should you place your stop loss? First of all, let's look at an area where you want to buy. So if I was looking for an area to buy, I would look at this area. I would look at the order block here. I would see, okay, we had a change of trend. Here we took this high out, so a retest of this area is very likely. So what I want to do is I want to place an order at this level, around this level. Then I want to place the stop loss, the target would be something like here. Take the liquidity above these highs, above this range, and the stop loss should be below the previous low or a significant low. So for example, this is the low of the market structure that does not should not be taken out. This should be held, so the stop loss should be below this low, and that's 2.45%. But of course, this is not this is relative to the time frame. So if you're on a higher time frame, then of course the stop loss could be 10%, could be 8%, it could be 20% if you're making a spot trade, swing trade. It really depends on the time frame you're looking and on the structure. You don't want to have a fixed stop loss of 2%, 1%, 3%, doesn't matter. You want to look at the structure. Where are you going to buy? What would be the interesting area to buy from? And from that area, look at where should you place your stop loss to prevent your trade from getting closed in loss, but also a logical place where price shouldn't go if it decides to pull back. Okay? Always look at what the structure is saying. If you're on the 30 minutes, 1 hour, 4 hour, doesn't really matter. Just look at what the structure is saying. If we're going to the 4 hour, for example, or let's go to the 6 hour even, a bit higher. If I want to take a short here, because of course this is a downtrend, we're looking at a bigger downtrend here. If I want to take a short, I would probably risk a short from around here, from this area, take out this supply, or reject from the supply, and then I would probably want to place my stop loss above this high. So yeah, like I said, this is the supply zone that I want to target for an entry for a short. Then where should I place my stop loss? It should be above the high, because that's where the price shouldn't go. Of course, you could argue that it wants to take out these highs because a lot of liquidity is above there. But just for this example, we want to take a place where the price should not go, and it is not a fixed percentage of 1%, 2%, or 3%. It is a percentage at this moment of 7.5%. And as soon as it hits and it breaks the structure, or it continues the structure to the downside, then you want to place your stop loss to break even, as it creates a new low, for example. So when this happens, it gets hit. Then at the moment when it goes further down, it creates a new low. Then this is the time to place the stop loss to break even. Okay. Always look at the RR for the stop loss. So if you're having a 7% stop and you're having an 8% target, or let's say a 10% target, then the RR is 1.38, 1.38, and that is very low. It shouldn't really matter if you have a very, very high win rate, but at this moment, most people have around 70% win rate, 60-70% win rate of the traders, especially retail traders, if they are profitable. But if you have a win rate of 60 or 70%, then a RR of 1.38 is very, very low, and you should always look for trades that have an RR of at least 3. That's my rule of thumb. I like to use an RR of a minimal of 3. Okay. So that's about it about stop losses. Try to look at the structure. Where are we going? What is the structure? Are we in a downtrend? Are we in a bull trend? Or an uptrend? I mean, if we are in a downtrend, make sure to put the shorts, the stop loss for the shorts above the high that should not be taken out, so above the protected high. And of course, if we are in an uptrend, you want to make sure to put the stop loss of the long order under the protected low. So these are this is a short video on stop loss. So yeah, next video will also be about risk management, because I think this is a very important subject. And I'll see you then.